Stocks retreating from correction territory. Look at the action today. The Dow is up 330 points. So should you, investors, and should you and your family be worried about your money? Let's bring in one of the best pros we've ever followed. He is Dennis Gartman. He's the editor and publisher of the Gartman Letter, which is widely read and followed on Wall Street. It is a must-read. Dennis, it's great to have you on the show. Nearly a fifth of the S&P is already in a bear market, down 20% or more from their most recent highs. Where do you see the market headed?
Yeah, Liz, I'm of the belief that this is actually the first vestiges of the start of a bear market, to be quite honest. I hate to be pessimistic. I'd rather be optimistic. But something has happened in the manner in which the markets have traded. Markets make their peaks long before economic activity peaks. Markets make their bottoms long before economic activity bottoms. Markets make their peaks in violent, rather esoteric type of trading that we've seen this week. I'm a little bit concerned, so I would tell people that they should be reducing their exposure, using any strength that they get to become less involved in the equities market, and cash is not such a bad thing after all.
You know, people keep saying, we're talking to Wall Street pros, Dennis, I love your thoughts here, that this is a really weird market when they're watching the trading behaviors and activity. What are you seeing?
It's astonishing to me. I've been at this for 40 years, and quite honestly, I have never seen anything like this. I spent a lot of time on the Board of Trade in Chicago in the midst of the pit, and I thought I'd seen volatility there. I've seen nothing like what we've seen today. There was one time, as I sat down in my chair to do a different interview earlier today, the Dow was down 380 points, and 15 minutes later it was up 150. That's what, a nearly 500 or 600 point move. The Dow itself, when I first started in the business, was at 410. So we're getting movements of 500 points in the course of an hour and a half. I have never seen anything quite like this, and I really hope that we don't see anything quite like this going forward.
Yeah, we've talked to traders. They feel like they were in the middle of artillery. They're shell-shocked.
Yes,
you know, so,
exactly.
But Dennis, is it because of the breadth and the height that the market went up? It went up so dramatically to those record highs. Is that why it feels so volatile now, the size of the swings?
Yeah, Liz, I think that's exactly what happened. The public got enamored of stocks late in the game, and the public always does. The amount of inflows of capital that came in October, November, December, and particularly in January were disturbing to me, because that was evidence to me that the public was finally buying into what had been a 9-year bull market. And as Joseph Kennedy once said, when the shoe clerks are in, he wants out. The public is always late to the game. It is not unusual, and we have to understand this. I think that the economy is doing quite well and likely shall continue to do so, but the monetary authorities are withdrawing reserves from the system at a time when the economy is demanding for plant and equipment and labor more capital, and that money comes out of the stock market and moves into the economy. It is not unusual. In fact, it is very normal for that to occur. We can continue to see economic strength. I think somebody was saying earlier, it's time to celebrate Main Street at the detriment of Wall Street.
You know, the saying also is that the market takes the staircase up and the elevator down. And you've commented.
We were talking about that.
Yeah, and you've commented on this too. $21 trillion in central bank money printing. That's a lot of pixie dust coming into the market. That's what floated the market higher for the 9 years. We've been complacent, and now it's been a rocket ship ride up and down. When will the volatility end? What do you think?
I hope it ends on Monday.
Yeah.
It probably won't, however. We were talking about that in the office today. The young man who puts in the orders for my account, Chip, and I were talking about the fact that the market goes up in an escalator and comes down in an elevator, and that's exactly what's going on. Let us hope that the volatility, this sort of volatility that we've had this week, runs its course very quickly. I think it probably shall mean that stocks will go lower. But this type of volatility is not sustainable. It's detrimental to the capital markets completely.
Are you still forecasting a bear market?
Yeah, I really am. I think that we have seen the start, the very beginnings of a bear market. You know, do I think, I heard Harry Dent on here earlier talking about a 40% or 50% decline. I think that's nonsense. But can we get down to, can we take stocks from their highs 15 to 20% lower? That would be very normal. That would be very historically precedented, and I think very likely.
Well, Dennis Gartman, we love having you on the show. Guys, you got to read the Gartman Letter. It's terrific. Good to have you on the show, Mr. Gartman. Great to see you.